Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live. What is today? Thursday, March 19th, 2020, and we again find ourselves in the final hour of the trading day. Thank you all so much for being here. I always appreciate you coming here. I think we have a great group. I always look forward to it. So I just mentioned the last hour of the trading day, and in my opinion, the most valid prices to make your buying and selling decisions from are the prices that are as close as the close as you can get them. During the day, you have the algorithms, you have the day traders. They're battling it out. They're fighting each other. I consider it mainly noise, intraday noise. At the end of the day, you have the large financial institutions coming in, buying the large amount of shares with the most capital. They take the prices away. That's why you'll see the prices at the end of the day move significantly from what they were during the normal part of the day, and that's because the large financial institutions are coming in. Now, are they always right? No, they're not, but I think they have the best pulse on the market. I think they have the best ideas of what the most valid prices are, and that's why I make the majority of my buying and selling decisions at the end of the day. And it frees you up during the day. You don't have to sit and watch the screens, which is also nice. So okay, let's take a look. Hey, Evan is here. Good to see you, Evan. Always nice to have Evan with us. Thank you, and good afternoon to you. Jackson, hey, Jackson's up early today. Good to see you, my friend. Morning all. And Greg, good morning to Jackson. Miko25, hello. Good to see you. Always nice to have you here. And I did reply to your email a little earlier, so I'm really looking forward to working with Miko25 in next week. We're going to start our lessons. Greg Perkins, hey Greg, good to see you. Nice to have you here. Thank you for coming back. I appreciate it. And we'll have to touch base and find out how you know Alan, my friend Alan, and Ashley down there in California. So thank you so much for coming by. Mount Doji, hey buddy. Good to see you. Always great to have Mount Doji here. Mount Doji is one of the first ones who follow this channel, so I appreciate that, Mount Doji. So, all right, well, listen, market is up today, off of its highs, but it is up. Dow Jones is up 143 points, 0.71%. The NASDAQ is up 223 points, up 3.19%. And the S&P is up 20 points, 0.85. So the clear winner today is the NASDAQ. So it's nice to have an update. It's been so volatile and so crazy and so historic that, even one day that the market doesn't go down is encouraging, right? The more days we can not go down or just stay the same, the more it will show that we're stabilizing and maybe some of this volatility is abating, but we shall see. Knock on wood. So, all right, here is the plan for today. First of all, we're going to run the U.S. legal disclaimer. Secondly, we're going to come back, take a look at my current positions. We're going to talk about when I bought them, why I bought them, what kind of trade they are, how I'm going to manage them moving forward. After that, as always, we're going to spend a few minutes on trader psychology. Extremely important, especially in this kind of market. Building a plan is important. Learning how to trade is important, but whether or not you can actually follow that plan is a whole other thing. And that is why I always like to spend a few minutes on trader psychology. I hope that if I pound this in your head each day, you'll listen and you'll start to internalize it into your trading, and it will just become a habit. Never has there been a time where position size and not being too heavily correlated and having too much account heat is important, right? There's never been a more important time now, and I'm sure some of you who have not done that have seen how important it is to have that built into your trading plan. So we're going to do a few minutes on that. After that, I'm going to come back. I've already gone through my watch list. When I look to enter a trade, I do have 3 requirements, whether it's a daily trade or a weekly trade or an intraday trade, but 3 requirements. 1, I want to see a confluence or combination of indicators lining up, like MACD or RSI or moving averages. I look at all 3 of those indicators, or multiple, there's more than 3, right? But I look at those indicators not as numbers or lines on a screen, but actually actual groups of buyers. And if you want to put yourself in the best position to have a profitable trade, if you want to increase your chances dramatically, you have to be in the company with as many other buyers as possible. So looking for a combination or a confluence of indicators buyers to me means looking for a combination or confluence of buyers. So that's step number one. Step number two, you want to make sure you have a good risk to reward ratio. You can have a great confluence of indicators or groups of buyers, but based upon what your filters are, RSI readings or ATR channels or moving averages, above you, it may not offer a good risk to reward. And you always want to have at least a minimum of 2 to 1. Even 3 to 1 is much better, and so forth, right? But if I'm going to risk $100, I want to be able to make at least $200 or more to the upside. So requirement number 2 is make sure you have a good risk to reward ratio, a minimum of 2 to 1. And thirdly, super, super important in this market with this volatility is do not have too many correlated positions. I was just talking with Dr. Jorgensen, who's in the chat. We were talking about, MasterCard and Visa. Well, obviously, if you buy MasterCard, most likely Visa's also going to go up. So if you buy them both on the same day and they go up, fantastic. But if they go down if the market's down and one goes down, most likely the other one's going to go down as well. So yeah, you can double your pleasure to the upside or double your pain to the downside. And it's always important to focus first and foremost on the risk. So not too many correlated positions. I mean, if you took a Philip Morris and a MasterCard, okay, right? They're not correlated, right? You don't want to have an Apple, an Amazon, and a Google all at the same time because they're so heavily correlated. So make sure you have some diversification in the amount of, or in the type of stocks that you're buying per day. And then in addition to that, account heat is very important as well. I don't ever put 60% of my capital at risk ever. I don't care if all 6 stocks or whatever I'm owning are completely uncorrelated, I still am not going to do it, right? So 60% is the max. And, I have a rule. I can have 2 tech stocks, but I can't have 2 tech stocks in the same day. I could buy Apple today and Amazon tomorrow, but I can't buy Apple and Amazon both on the same day for the reasons I just went through. So there's a couple here potentials at the end of the day. So we'll go through those, take a look, depending on what kind of time we have. We may just go down through all of them and take a look. But, this market has had these rallies, but then giving them back. What we really need to see is we need to see a couple days up. We need to just see not one day up being sold into. And that's been the pattern lately. So anyway, we'll get through all of that, and then after the market closes, if anybody has any questions, please let me know. I'm very happy to answer them. If you need some help with anything, let me know. Anything I discuss, you need some clarification on, please let me know that as well. If you have any stock symbols that you would like me to take a look at, give you my opinion on, I'm happy to do that. If there's anything that you think would be helpful for the group before the market closes and you'd like to get my opinion on, please let me know. Please make sure you put a star by it in the chat. That way I'll know it's time sensitive and I can do my very best to get to it before the market closes. All right, so that is the plan. So hang tight. I'm going to run the US legal disclaimer and I will be back shortly. Thanks. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. Hey, I just got a message from Frederick, our friend in France. He is in quarantine at his home. And so good to hear from him. Glad to hear he's watching the channel. And if you're listening out there, Frederick, hope you're doing well, my friend. Hope you're hanging in there. And Frederick says hi to everybody. Okay. Jackson says, ha, I am. Quite a day in Algo land. Zach, hello, Zach. Nice to see you. Mount Doji says, good thing I didn't get that Uber put we talked about yesterday, right? Yeah. I mean, there was so much weakness on that. when I studied with Dr. Alexander Elder, his kind of basic thoughts on trading are, buy when there's winter time and short when there's summertime. And right now, Uber, as of yesterday, was definitely in wintertime, and he doesn't like to short in wintertime. He likes to short strength, not weaknesses. Steve Burns, hey bud, good to see you, my friend. Always an honor and a privilege to have you here, Steve. Really is. I say that every day, but I mean it, and I know everyone else really appreciates you being here. So I really feel lucky, and I think we should all feel lucky to have someone of Steve's stature in the chat every day. So thank you, Steve. Steve says, some stocks of companies that should not have earnings and sales hurt. Some stocks of companies that should not have earnings and sales hurt. WBA, Walmart. Oh, I see. Okay, these are stocks that shouldn't have their earnings hurt. Yeah, that makes sense with Walmart. I think Walmart made an all-time high today. In Zoom, let's take a look at Zoom. Whoa! Hey, I wonder if Bing He has this. He had it yesterday. Fantastic. Let's take a look at WBA. Oh goodness. Look at that one today, huh? Rejected that 200 pretty substantially. Walmart. Yeah. Well, it was up much higher today earlier, but above its 200-day. That's impressive. KR, what's that? Kroger? Yeah. Yep. In an uptrend. Fantastic. HML. Ken Pharmacy. Oh. HML? Oh. HML. Now, I can't pull that one up, unfortunately. And Zoom that we just looked at. Boy. That was a good little formation. I didn't have a trigger. We were above the 1 ATR channel. We came into the value zone. We consolidated. I just didn't get the dang trigger. But I think Bing He entered. So hopefully you have that if you're out there, Bing He. Andrea, good to see you. Steve Burns, there is no hand sanitizer available at Walmart. Yeah, that doesn't surprise me. Frank is here. Good to see you, Frank. Frank has a poem for us. Let's take a look, see what he has to say. Mark to market with the speed of a rocket. Mark to market with the speed of a rocket. Volatility swings before the bell rings. To trade is to enable. We are human. Lo, what can we do? Let's start with the simple and caring. How are you? I agree. A how are you would be nice. Mark to market with the speed of a rocket. Volatility swings before the bell rings. To trade is to enable. We are human. Lo, what can we do? Let's start with the simple and caring. How are you? Thank you so much, Frank. Appreciate that, my friend. Always do. And by the way, Joe, not here today, but he did email me earlier a poem. So let me put this in here. I'll put it in the chat, and I will read it. There is a dim light at the end of the tunnel, even though it looks like... Sorry. Redo. There is a dim light at the end of the tunnel, even though it's like looking through a funnel. When they finally stop this invisible attack, I'm sure the market will get back on track. So thank you, Joe, for sending me that, and I hope everyone can appreciate those two great poems from Frank and from Joe. Trading with feels. Frank says, too many people hurting. Yep. Hello, Bob. Nice to see you. Appreciate you being here. Hello all. Jackson says, sure is, and it's very good to check up on people. It's quite a day for me, as my algo doesn't really do much when it goes up, so thought I'd jump in while quiet. Okay, well, I appreciate that, Jackson. Gamer, hey, Greg. Hey, good to see you. Always good to have Dave here. Hormel. HRL. Whoa, there we go. What a big move, huh? Whew. Big move. Yep, well, those companies seem to be doing well, and Clorox and everything, right? All All right, well, let's take a look here. I don't have too many directional trades on, as you know. I decided in this market, it just made sense to me to go ahead, sell some premium with some good protection to the downside. You know, usually you sell premium in a non-volatile market, you don't get enough, but in these kind of markets, you get a lot of premium. A lot of these, the premium that I wrote on these puts here, you know, work out to be about 8, 9, 10% annualized return with the added protection of having, or with the added benefit of having protection to the downside. Let's start here on Walt Disney. I did sell puts on Walt Disney down here to $50, expiring January 15th, 21, which means that if Walt Disney does stay above $50 by next January, I will be able to keep $375 per contract times however many contracts I have. But the annual return on this was somewhere between, I don't know right off the top of my head, it was $8, $9, $10, somewhere in there. You know, if it does come back down here, I will be required to buy it down here, but I'll just have to see what happens. But I'm basically just trying to run out the clock on this trade. And of course, every day that it goes up is good for me. So it has been a good, profitable day, thankfully, today. So if you have any questions on this, let me know. But it does expire January 15th, 21, down to $50. Otherwise, if it doesn't get down there, I'll be able to just keep all the premium. And like I said, the premium normally would not be anything to write home about, but because the volatility is so high, the price that put sellers have to make it worth their while is so high. That's why the 8, 9, 10% type of premium that I'm getting. Gold. So gold was a directional trade. I did take this back. The charts got mixed up, but I did buy it here at 141.94. Luckily, I did hit 2 profit targets yesterday. I missed it right at the close. It was just right on my price point, and right at the end, it just went right down below, and I stayed in it. I missed it, unfortunately. I did have to get out here today, 138.64. So anyway, this was unfortunate to take a loss, but didn't seem like much of a loss compared to what I've been used to. But anyway, that's just one of those things. Sometimes at the end of the day, you know, you have that line in the sand and it's bouncing up around, bouncing down below. And so when I got up this morning, I saw that it was under 200. I just went ahead and sold it. So I'm going to take this one off the table. Okay, Q's. Q's is another put that I sold. Sold it down here to $130. Currently, it's $181.27. This expires June 30th in 2020. I got $350 contract, similar to Disney with the rate of return. Maybe not quite as much as Disney. But again, as long as the price stays above $130, I'll be able to keep the premium. If it goes down there, I'll either have to get out or just take the shares at that price. But it is 27% below us. So if we get down there, I guess we have bigger problems if the market drops another 27 to 30%. Although it could, right? Let's keep that in mind. It could definitely drop that much. That's why I'm getting paid so much for that. SPY. All right, so I did write a contract on SPY down, puts on SPY down to $200, expiring tomorrow. It's at 243. I got about 98% of my premium today, so I went ahead and just locked in the profits. I got $100 per contract, so it was nice to take some risk off today on this trade. So that one worked out well, and I did lock in $100 for however many contracts I had because it's holding above the 200. So, oh, I guess I should also, shoot. Let me see here. 239.26. So I did do the overnight SPY trade. 239.26. All right, and let me just, in case we have some new viewers, let me go over that just real quickly. But I do buy the SPY every day at the end of the day. I sell it first thing the next morning. It has nothing to do with technicals, resistance levels, anything like that. It has to do with the long-term backtest study from Liz Ann Saunders. This back test was done every day since 1993. She's at Bespoke Invest on Twitter. Two options. First option, buy the SPY at the open, sell it at the close every day. Second option, buy the SPY at the close, hold it overnight, sell it the next morning. This is the one that I use. I use the buy at the close, sell the open. The buying at the open, sell at the close, if you did it every day, was a negative 13.9% return. The one that I use over time returned 634.2% return. Past performance is no guarantee of future results. That is true with any trading approach, but you can see the buy in the afternoon, sell in the morning over time, not in the short run, I can assure you that, but over time has had a nice equity curve where the orange line, the buy in the morning, sell in the afternoon, has not. There are ups and downs, boy, and I can attest to that. 2019 was a fantastic year. 2020 has been miserable, but that is why I only take at maximum a 10% position size on this overnight. So with that being said, boy, this has been a horrible approach this year. Horrible. Luckily, the last few days I have reduced my position size from a full position, 10%, down to a quarter position because of the added volatility. I bought it here yesterday, 240 even, sold it this morning for 239.26. So less than a dollar, loss on that. And that reminds me, I have not put in my automatic order. So I am buying this again today at the close, 0.25%. Let me just put that order in so I don't have to worry about it after. Okay, so that's in. Okay. So anyway, did get out of the puts today, got about 98% of the premium, so happy for that. Exxon is another put that I sold. Again, the reason I'm selling puts here is to give myself some good downside protection on some of these stocks while still getting a decent risk rate of return. Doesn't mean it's going to come in, doesn't mean it can't go lower, but this is a yearly chart. So I did write puts on Exxon down to $25, gives me about 25% protection from here, although that may not be enough, but I did write it here at the 50-year moving average. We'll see if that gives me some support or not. Okay, so those are the positions. I did take an intraday trade on Apple, which depending on how it closes, I'll transfer into a normal over regular position. I did buy Apple way back here. These are 5-minute bars. I bought it at 247.51. I bought it, and let me show you why I bought it. I like the return into the value zone. I like the sideways move. My trigger was the move and close back over the 200-day. Right in the value zone. So again, the return to value, the sideways movement, the close back above 200. If I was wrong, hopefully I'd be wrong small with the close under 200. If I was right, I could have the ability for a nice upward trend. And you can see this did really move up nicely. I didn't take any profits because, like I said, my goal here on this particular trade is to transfer it into an overnight, just a regular trade. But anyway, it is positive. It is positive, close to a couple dollars, which is good. But if it does close above the 200-day, I will go ahead and just keep this as a normal trade. If it closes under the 200-day, I will go ahead and just get out and take whatever little profit or loss that I have at the moment. But I do like the rejection of the 200-day. Apple, anything over the 200-day right now is much stronger than the majority of the market. So most likely I would have bought this anyway, but I did get a little bit of a head start on it with the 5-minute intraday chart. So basically the 200-day is on the 5-minute chart is very close to just the 200-day on the daily chart. So if it does close above the 200, I will go ahead and keep it. Because of volatility, this is only a half of a position. All right, now let me talk to you about a trade that I took today on MasterCard. Of course, this market has been very, very scary. We've had huge dramatic drops. We've sold off unprecedented levels in a short amount of time. The market scares me, honestly. That's why I've been reducing my position size, being very careful with protection on the downside and so forth with puts. But we never know we never know when there's going to be low in the market. So what I did today is I actually bought some calls on Microsoft. I like the trigger today. I may have bought this anyway. It went under 30, over 30, bullish engulfing bar, under the negative third ATR channel and back above the negative third ATR channel. So this is the type of trade I would take on a normal day anyway. But what I did is I bought some $230 calls, not puts, but I bought some calls expiring on the 21st. When you buy calls, it gives you a defined risk. Even if the market goes crashing down 8,000 points tomorrow, I can only lose what the premium I paid for this. So what I'm going to do with this is if this closes below the 30, like I would a normal trade, I would just get out, take a loss on the calls. I'm going to be patient with this to the upside. I'll see if and how it responds around the 200. That might be a place for me to take off. But, this gives me some time to have some upside potential on these calls with a limited defined risk. So, at this point with the market down so far, not saying it can't go down any further, but, identified an amount that I was fine to lose if the market goes crashing down. But, I may make 2, 3, or 4, 5 times to the upside. And what I liked about why I bought it today was just the normal entry that I would have taken. So because of the bullish engulfing bar and the under 30 over 30 and the under the third ATR channel over the third ATR channel. So anyway, hope that makes sense. If you have any questions, please let me know. But yeah, so far, really good day. I'm happy for it and grateful for it for sure. Jackson said, when did you place those Disney puts? Couple days ago, I believe it was a couple days ago. They're a little underwater at the moment, but not too bad because Disney is up so big today. Andrea, I did sell premium on Apple. Oh, interesting. Where did you sell it down to? Kamal, hey Kamal, good to see you. And by the way, Kamal and I chat often, and I believe Kamal also did buy some longer term calls on some of the best companies like MasterCard, I think maybe Microsoft. Hey Bing He, how you doing? Are you still in? Oh, Jackson just asked, are you still in Zoom? Oh yes, sweet. Congratulations, Bing He, good work. Thank you. Frank, lately Liz Ann Sonner has been one expensive date. I'm telling you, she has for sure. But, again, Frank, since 1993, that it's been a pretty dang good approach. But, as I showed you from that chart, there are years where that thing goes down. So I'm just taking the long-term approach on this, with the current conservative position size. Jackson, the world famous overnight punch in the face. Yes, 100%. I totally agree with that. Andrea says, no one can factor in a black swan. That's true. If we didn't have this black swan, I don't think it would have done so poorly. Hey, Marco, hope you're doing well. Hope you're, are you in quarantine over there in Slovenia, Marco? I haven't heard much about Slovenia, but thank you for coming. Sold ZM. All right. I'm so glad for Bing He. Up 10% today like a boss. Bing He, also good work, mate. Getting out is important. So that was my net question. Very happy for you. I am too. All right. So listen, everybody, before we get over to the watch list and see, what the potential candidates for the end of day trade is for me, I do like to talk about trader psychology. It's super important. Really, in my opinion, it's the most important part of trading. You can put together a plan. You can learn all about trading, but unless you can follow that plan, there's no sense in trading if you can't follow the plan, right? So if you find yourself not being able to follow your plan, you have some work to do on yourself. You have some work to do on your discipline, and think of it as a skill. Discipline is a skill, and that you need to work on it. And that's why I like to talk about, good trading quotes from great channels on Facebook and Twitter. And one of the very best out there, my favorite guy, Stephen Burns, friend of the channel, who's in here right now. Thank you so much, Steve. And if you have not followed Steve on Twitter, please do. Steve Burns, or at @SJosephBurns on Twitter. But I read this and, it really did kind of hit home to me, and I thought it might be helpful. But Steve says, no trading system works in every market environment, but a lack of a system can make you lose money in every market. So it makes sense, right? I mean, when you're losing money, you're out of phase in the market, out of phase with the market. When you're making money, you're in phase with the market. And no matter what approach you use, you're never going to be in phase with the market 100% of the time. That's why we have drawdowns, right? Makes sense. So just because your trading system at the moment is not working, and mine has not been rainbows and butterflies, I can tell you that, right? But we're in a unique situation here, and I'm just essentially not trying to make money, but lose less money in this situation until my trading methodologies get back in phase with the market. But what Steve's saying here, no trading system works in every market environment. That's true. But a lack of a system can make you lose money in every market. So if you don't have a plan, even if you have a plan, it's not going to work all the time, right? We just understand that's why you have drawdowns. But if you don't have a plan, no matter what's happening, you can lose money in every market condition. If you're shorting when the market's strong, you're going to lose money. If you're buying, and don't have stops and a plan, you're going to lose money. So you have to get some kind of trading plan. I say this all the time. The more I trade, the more I realize it doesn't matter how really good your trading plan is. Of course, there's some people, including myself, that put a lot of time and obsess upon every little detail. But in the big picture, as long as you have a decent trading plan and follow it, the following it is the most important part. You can have a very simple trading plan, like a crossover trade, right? Or there's so many simple plans, but really your plan, what it should incorporate is, having a small loss if you're wrong, having a big loss if you're correct, right? If you're right on the trade. That's really what it is. You can get really into the weeds on really complicated plans, but the more I do this, the more I realize just make sure you cut your losses quick and let your winners run. And that's a plan, right? And you just have to have some line in the sand, some reference point of like, I'm in above, I'm down below. There's really no magical number. The 200 and the 250 works well because that's what a lot of people look at. But, if you use the 186 and a half move, I'm not sure you could have a half, but if you use the 186 day moving average or the 311 moving average, it would be fine, in my opinion. I'm in above the 311, I'm down below the 311. And actually I've done this. I can't remember now if this was with Andrea or Kamal. I think it was with Andrea. We just put random numbers into etfreplay.com and looked at the results, and even the random numbers had great wins and had smaller losses. Just right. So there really is no magic number. I like the 200. I like the 250 because they're well known. They're well followed. But again, don't have to have the best system in the world. Just make sure you have a system. So no trading system works in every market environment. Totally true. But a lack of a system can make you money in every market. So thank you, Steve Burns. Appreciate that. And I hope that helps. Okay. Let's take a look-see over here. Let me take a look-see over here. Andrew says, I copied you and sold the 170 January 21 on Apple puts. All right. Well, the reason that I sold the 21s, by the way, I didn't just, not the 21s, but the 170s. The reason I sold the 170s is because I had a confluence of support on multiple time frames. Here on Apple, the $170 mark coincides with the third ATR channel. That should be some support. Doesn't have to be, but it should be, or it could be, I should say, right? Now we go to the quarterly. Well, look, the quarterly is right here at the 20 quarter, right? So I have 170 aligning at the third ATR channel on the yearly. I have 170 corresponding with the 20 on the quarterly. The 170 lines up nicely on the at the 50-month moving average. I can't remember on the weekly if it lined up with anything. Yeah, and on the weekly it lines up with the 200-week moving average. So does it mean it's going to be a positive trade? 100% not, right? No trade is. But that's how when I write puts, I like to look at multiple time frames, and I like to have my strike price have support on multiple time frames. So that's why I sold it down there, and we shall see. We shall see. Andrew says, that's awesome, being he. I agree. Frank says, the market can last a lot longer than our cash. Yes, that is true. Steve says, the almighty Steve, true words, true words. Kamal, I have January 2020 calls. Oh, I'm going to have to do these later. I'll have to mock them up later. But Kamal says, actually, let me copy this so I can do that correctly. Okay. Kamal says, I have 2020, so he went out to 2022, right? I went out to 2021, he went out to 2022. Calls on Microsoft, $135, Google, $1,100, Amazon, $1,830, MasterCard, $245, Home Depot, $160. Not very diversified. Sorry, Greg, that's fine. I will give it all away and take nice fat losses if we break the lows. Go hydroxychloroquine. Yep. Have you heard the news on this today, the hydroxychloroquine? I don't want to say something that's incorrect, but I think it's having some success or alleviating some symptoms or something. But yeah, I mean, I get it, Kamal, that, you know, they're not diversified, but, you know, I look at this as a little bit different trade. These are 2 years away, and you're buying the best companies. That's the key. I've said this before. You know, when a market's down here like this, don't buy junky companies, right? Buy the best companies with the best balance sheets, the stocks that have the best chance of surviving that. And that certainly is Microsoft and Google and Amazon and Home Depot. So yeah, I think it's a good mix. You're buying the best stocks, you know, you're buying the world's best stocks, you're giving it some time. And, you know, in a lot of trading markets, I wouldn't consider it. But in this trading market, I am considering it. That's why I bought the MasterCards today. Marco says, Steve is the best. He 100% is. Steve says, thanks for sharing, Greg. This is our third time This is our third time through a chaotic market like 9/11 and 2008. We have learned a valuable lesson. Congrats on your cash secured puts. Well played. Oh, thank you. Well, only out of one of them. only rang the cash register on the puts, on the S&P puts. But anyway, happy for that as well. Kamal says Amazon might be a new trend leader, 100%. Jackson said, couldn't agree more, Greg. Following your plan is imperative, and my calories burnt in my head are much less for it and much happier. Glad to hear that. Andrew says, yeah, that random MA thing was with me. Oh, that's right. That's right. Yep. Dr. Jorgensen said, I tried to write a prescription for chloroquine at the local pharmacy a week ago and could not get filled, out of stock, waiting for them to get it in. Doubt that will happen. Well, let's hope it does. Has something to do with zinc and something, right, Bruce? Frank says, plans don't promise to make you happy, but they will bring you peace of mind. 100%, Frank. Chloroquine looks very promising. Dan, Greg, the Apple trade technique, that's your big gun. Impressive. Well, we'll see, Dan, right? But it's a plan. It's a plan. It gives me protection to the downside. It gives me some time in the future, right? It gives me some time in the future for some of these things to be resolved. So we'll see. Dan says, I don't get how to enter options. You know, I know options sound, to somebody new, they sound difficult. And with the terminology and buying to open and selling to close, I made a mistake today. I'll show you guys. I made a mistake today. I made a total rookie mistake. I went to buy calls on MasterCard and I actually bought puts on accident, and I saw the market go up and I was like, why is my P&L going down? And I'm like, oh my gosh. So just a quick aside, if you're buying options or buying stock, make sure if you're buying calls, it sells calls. Make sure if you want to buy, you're buying and not shorting, right? It happens to everyone. I don't know a trader this doesn't happen to, but anyway, okay. Let's see what's happening here. Oh, my apples were looking so good. Now they've come down. Again, I bought this over here with this pullback into value, break above the 200. My stop was going to be a close below. You can see it really rallied nice, and then it gave it back up. Now we're consolidating again. I'm still up on the trade, but we'll have to see. If it closes below the 200, like I said, I will just go ahead and take a small gain or a small loss or whatever it is on my day trade. If it closes above the 200, I will keep it and I'll convert it into a close over the 200 day with the close back under the 200. So I did only take a half position here because of the added volatility. Okie dokie. Well, let's go down through the charts, take a look, see if anything looks interesting. Again, we were just talking about Apple. You know, I do like the under 200, over 200. Potentially giving me a small loss if I'm wrong, potentially giving me a nice gain if I'm right. Who knows? Very difficult. It's difficult in any market to try to figure out. I mean, the honest truth is you just never know, right? But you have to have a plan. Being that I'm in the money on this trade from the daily or from the 5-minute chart, I'll go with this. It's a half position. If it goes down, so be it, right? But at least it's a half position. So, I was talking to Dr. Jorgensen about this earlier, but you know, when you've gotten beat up, when you've had this type of market, it's very easy not to take your trades. And for me, I don't think it's the right thing. Now, reducing your position size 100%, but to me, it's important to keep in the mode of trading and not getting in the mode of everything subjective. Maybe one day I'll take it, maybe one day I won't, depending how I feel. You know what I mean? And that's the reason I've continued on with the overnight trade, right? Although I did skip it one day, and of course, Lizanne Saunders is never going to speak to me again, and she's going to divorce me. But that's how it goes, I guess, right? But I'm back on the overnight SPY trade for that very reason. I just don't want to get in the habit of picking and choosing and picking and choosing and picking and choosing how I feel based upon what my last gains were or based upon what my last profits are. But reducing position size lets me go through the motions, still take the trade. It still has to be a valid trade, right? But, you know, the close over the 200-day on Apple is definitely backtest well, and that's why I'm going to take it, but with a half position. How are we doing on time? All right, so we better hustle. Adobe, you know, last time it went under 200 over and just got clobbered. It's back over again, but I'm not taking Adobe because likely I'm going to take Apple. Amazon, very, very strong here. Close above the 200-day, close above the 50 RSI. Did reject the 50-day moving average, which is a little concerning. Listen, you know, Amazon might trend from here. I have no idea. But I do like the risk to reward of Apple better than I do like the risk of reward of Amazon all the way back down here. And it did also reject the 50-day moving average. If I would have bought this down here for whatever reason, you know, most likely I would get out here with the rejection. So I do like Apple better. I may buy some calls on Amazon if we get another big dip. I'm not sure. Boeing down again. At least it's moving sideways. That's somewhat good, but nothing on Boeing. Berkshire Hathaway stopped going down. You know, in order to go back up, not going down is a good start. As a matter of fact, you have to have that happen. Beyond Meat up nicely today. Bullish engulfing bar. V1 still under 30. Caterpillar has held pretty strong here, hasn't it? I mean, it wasn't down yesterday when the market was down. It's held pretty strong here. Nothing for me to buy here. I'd like to see this move up into the value zone, come back down, have a higher low V1, V2, and pick it up there. The Dow looks like it went. Yesterday it went under 30, over 30. Today it's still holding here. But again, I'm going to be very careful on the amount of actual directional trades that I take here. So I'm going to pass on that. Walt Disney is a champion of champions. Again, I did sell the puts down here to $50. We'll see. Gives us about 44 points to the downside, but I'm not sure that's enough in this day and age. We do have a nice V2 here, day 1, day 2, day 3, day 2, washout day 1, day 3, close above day 1's close. I mentioned yesterday this big reversal bar with the volume did look pretty impressive. I didn't take the trade because, again, I have puts on Apple and I just don't want too much correlation. Very important. Etsy down, oh goodness, Etsy's down 11.96% under the 30. Facebook, I think, had a nice day. Yep, up 7.63%. 38 RSI. Fine. This yesterday would have been the day to buy that, or the other day with the under 30, over 30. But I didn't want too much correlation. So nothing for me on Facebook. Gold. I already took those off, but I did buy that over the 200, hit a couple profit targets, just missed my entry at the end today and paid for it here, but I got out. I don't know. I took the price off, but it was a small loss at least. Google having a nice day. Under 30, over 30 back here a few days, came back down. That'd have been hard to hold through that, I can tell you what. But it is a good sign that we are closing above the negative third ATR channel. That is a good sign, but I'm not going to take Google and Apple on the same day, and Apple seems to have a better risk reward. Goldman Sachs, nice V1, still under the third ATR channel. Home Depot, nice little rally today, back over the 30 RSI. So good job, Kamal. How are we doing on time? Okay, NASDAQ, sideways. Intel, at least it's not going down. Oh, it is going down 4.72. At least it hasn't made new lows, but it's kind of consolidating, building a base down there. Russell 2000 up pretty big today. Was fortunate. Account that I manage did sell some puts up here at 150. Can you imagine? It did cover some down here today, so glad for that. Bought some puts anyway. Johnson & Johnson turned down the other way. CarMax still down. This has been extremely brutal. Coca-Cola also down today, under 30. Lockheed Martin down 5%. Interesting. Big bar yesterday. You can see we're holding the halfway of this. So I'd like to get into Lockheed Martin if I could get some kind of real good signal, because this would diversify me out of some other stuff. MasterCard, of course, bought those calls today. 230 calls. So they are in the money calls because I bought them 230 calls. Right now it's 232, which makes them in the money. Although I'm down on the trade, but they are in the money calls. McDonald's, big day today, under 30, over 30. This isn't too bad. I'd like it better if it was over the third ATR channel. Merck, up a skosh today. Microsoft, was above the 200-day and lost it. Was above the 200-day and lost it. Netflix, big strong day today, big nice strong above the 200, although looking at where the 50 RSI is compared to where the 200-day moving average is, the way I would view this is not that it's not a good risk to reward. Nike, V2, day 1, day 2, day 3, day 2 washes out day 1, day 3 looks like it's going to close above, under 30, over 30, under the negative third ATR channel, over the negative third ATR channel. This is pretty good. This is pretty good here, but it looks like I'm going to take Apple, and it looks like I'm buying those MasterCard calls, so I'm not. But this one looks pretty good, actually, on the weekly, under the 250 week, under the 200 week, and back over. If I had not already taken positions, I probably would possibly poke my head into this one, but I'm not going to take it today. Philip Morris down today. I mean, up today, but it's been way, way down. PayPal, bit of a rally. The Qs, of course, I have Qs. Sold puts on the Qs down to 130. So we'll see if that level can hold. We shall see. I don't know. We never know. Silver up a bit today. SPY did take that slight overnight SPY loss. We'll be buying that again today at the end of the market. So I don't have that price yet. Bonds, interestingly, up a little bit today, but this is the last thing we want to see. We don't, seeing interest rates go up while the economy is being shut down. So anyway, I'd like to see that go back up. Tesla Tesla had a nice under 200, over 200, beautiful one as a matter of fact, right? Like really, really good and strong. Close under the 200, over the 200. But, you know, you have the 100-day moving average here, the negative third ATR channel. I mean, you know, I wouldn't, normally I would probably take this, but it is up 18%. With a close under. At this point, I just don't like the risk to reward. Doesn't mean that it has to stop right here, but likely it might stop. So based upon that, I don't like the risk to reward. Yeah, this is a tough one, but I'm going to stay away from Twitter. From Tesla. Twitter, nice bounce back under 30, over 30. UAL, down again. Natural gas, bit of a rally today. UNH, healthcare holding above the negative third ATR channel, which is good. Oil had a big rally today, up 13%. These numbers are just ruining us all in the future. When things go up 0.5% or 0.75%, we're just going to yawn, right? When this thing settles down. Yeah, let's see what the VIX is doing. Yeah, VIX is down pretty substantially today on some pretty good volume. That might be a good sign for the market. I'm not saying it is, but you know, we were up some days. We were up on the market some days when the VIX was holding steady. That's not a good sign. So I am glad to see a big volatility bar to the downside on some decent volume. That might be good for equities. Might. I'm not saying, just potentially. Verizon, Walmart, much stronger earlier, gave some back here. Not going to buy that. XLE up a little bit. And when I mean a little bit, 4.92%, still under the 20. XLF, which is the financials, up a little bit today. I do like the divergence of down on the price, and you can see the RSI's low, higher, even though it's lower. So under 30, over 30, not bad. But again, my dance card is already full with the potential Apple and the MasterCard. So I kind of want to drive that point home, that just because everything on an up day, a lot of things look good, right? They just look good, but it doesn't mean that I'm going to buy everything. I have to temper that. Utilities down. Healthcare down. So, oh, how dare you? MasterCard went negative on the day. That is rude. Okay. So Apple looks like about the only thing, and let's take a look. Are we below my entry now? Oh, goodness me. Well, unfortunately, this turned out to be a wonderful trade, and I gave it all back. But it was my plan. It was my plan. If it was going to hold above the 200, I was going to keep it. And right now, it looks like it's under the 200. So it looks like I may have to go ahead and just sell this. Well, that's unfortunate. As a matter of fact, I am going to have to sell it here in 82 seconds. If it closes under the 200-day, because that was my stop on the intraday trade. Makes sense. This is one of the ones that I didn't scale out of because I had a different trade plan. And I can listen. It's good, in my opinion, to have different trade plans, right? Some shorter term, some longer term. Just make the determination of what you're gonna. If you tell yourself, I'm gonna phase out, I'm gonna get out with a close below the previous day's low, fantastic. Do it. If you take another trade where you're like, okay, I'm just going to hold this baby as long as it holds above the 200, fantastic. Do it. See what I mean? Well, boy, anybody see any news? What happened? Republican National Committee suspend in-person fundraising as coronavirus spreads. Yay. Okay. So with that being said, let's take a look here. Yep, there you go. Well, that's moving up. Oh, now it's back over the 200, so I guess I'll just hang in there. This is wildness. This is wildness, yeah. I'm gonna have to just... Let's take a look real quick. All right. All right. I'm just gonna have to take that. Yeah. Take that small loss, unfortunately. If it closes back above the 200, I will consider taking it. So I'll just have to wait 5 minutes. Andrew says, Dan, honestly, it's not as complicated as it sounds. You should buy the Kindle book Understanding Options, second edition by Michael. Thank you. Thank you for that, Andrea. Zach says, I'll look as well. That is one thing I've been really wanting to learn. I think it's a good idea to learn it. I do. Apple testing 200. Yes, Andrea, I will. Thank you. I actually like Disney today. Disney was so brutally brutalized. Everything does look good on an up day. I think it is in our DNA to have short memories. Yeah, I agree. All right, so really what I'm going to do here, I am not going to buy Apple unless it closes above the 200 day. Okay, so I'm glad I pulled the trigger on Apple. I'll just kind of have to wait this out here for the next few minutes to see if it's strong enough to close above the 200 or not. Let's take a look at that Disney for Mount Doji. Yeah, I mean, it is a nice V2, under 30, over the third ATR channel. Yeah, you know, if I were going to enter this, I would probably get out with the stop below the 30 RSI or a stop below halfway of the washout bar, whichever came first. Well, looks like Apple is selling off now. Oh, I'm glad I got back out up here instead of just holding on and hoping, right? Man, this is a crazy market. All right, we have 1 minute. $247.17 is the line in the sand for Apple. Yeah, it looks like it's continuing to sell off there. So it looks like the only trade for me today is going to be the overnight SPY trade. Okay. All right, so the SPY came in at 240.51. Quarter position because of the volatility. So quickly, just want to go over here, show you the trades I did for today. So SPY, I sold this morning, SPY 239.26. Bought Apple at 247.51. It got up to 250. Unfortunately, I had to sell the gold at 138. I did buy to close the puts that I was telling you about. Only 9 cents left in the premium. Bought some of these. Oh yeah, here was the put that I accidentally bought. Bought it at 241.40 and had to sell it at 241 or 240 even. Excuse me, 40.41. Sold it at 40 even, and then bought the puts, the calls, the 230 calls, expiring 115 at $47. Sold the Apple, so I did take a little over $1 loss on the Apple and bought the SPY here at 240.51. So anyway, I feel pretty good about this. It was nice to have that nice day trade, but it turned around on that news. You know, I feel good about not adding too much today, other than those long terms, and feel good about, you know, closing out the SPY put positions. So it's really important not to get caught up into buying lots and lots of different things just because the market's gone up. And we know from past experience what that has done lately, right? You buy them and then they, boom, just sink on you the next day. So anyway, all right. Dr. Jorgensen says, good hike, off on the bike, easier pedaling today with the market up a bit. I agree. So listen, if anybody has any other questions, please let me know. I'll just do my quick plug. Hope that's okay. Just let everybody know that I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. They're one-on-ones, just you and I. I teach you everything I've learned over the last 24 years as a full-time trader. I teach you everything I've learned from people, you know, coaches and mentors that I've studied with one-on-one for years, like Steve Burns and Dr. Alexander Elder and Carrie Lavorne and Larry Williams, plus all the things I developed over the years. And I do have a course, the one-on-one course, 5 sessions, each session somewhere between 2 and 3 hours. It's pretty comprehensive. You know, the format for the lessons I teach you when I'm teaching you that day for about the first part of the session. Then the second part of the session, I have you teach back to me. We do a lot of chart study. I want to make sure that you really have understood what I've told you about, but we do lots of chart study. I ask you a lot of questions. I put you on the spot a lot. And by doing that, I think it's the best way to teach, because I can tell by the way you teach it back to me whether you have it or not. So if you're interested, I do like to have a free Skype call with a prospective student. I promise you there's no obligation or no pressure whatsoever. I'm really selective in the students that I like to take on. You know, during the Skype call, I just want to learn more about you, learn more about your trading career, your challenges, you know, your approaches, your goals. And then of course, that's a good time you can ask me any questions that you have. So if you're interested and, you know, want to schedule that Skype call, and like I said, there's no pressure, I promise you. You can reach out to me. My email's in the description of this video, or you can also send me a message on Twitter. And I'm working with some really great students right now, and starting with Michael next week. So I'm looking forward to that. So anyway, that's my plug. If anybody has any questions, I guess I should say too, if you like today's podcast, I appreciate it if you could hit the thumbs up button. I had a little issue with Google. It didn't get the link out there today. So any likes would help today. I would appreciate it before you get out of here if you like today's content. Okay, so Understanding Options, 2nd edition by Michael Sincere. Sounds good. And there are also a lot of YouTube channels out there that give lessons on options. I think I'm going to put together a video on selling puts based upon technical analysis on multiple time frames. I can't remember if that was Zach. Was it Zach who suggested that, or maybe Evan? But I am planning on doing that in the next little while here. All right. So, how did everybody else do today? Anybody take any positions, anything today? Okay. Get rid of that one, and get rid of that one, and get rid of that one, and that one, and then over there. All right. Zach, okay, it was you, Zach. Okay, yep. I think it's probably a pretty good time to do something like that. So no trades from anybody, nothing. Let's see. Yeah, I was thought for sure that I would be able to get in on the Apple trade, but anyway, had to follow the rules, right? That's the key. Jackson says, I did well. No signals for me. My system is rather boring on these up days. I'm a downside man. Downside Jackson. That's the new nickname. Frank says, I don't like naked options for want of a better term. Yeah, well, I guess you could call them cash secured as well. But yeah, of course, there are definitely pluses and minuses, you know. My point is that, you know, all I can do is create a plan. All I can do is identify support on multiple time frames and take a conservative position size. Frank, a lot of people when they sell puts, they're taking a huge position size, like a ton, because they feel like they have so much protection below them. But I don't do that. I just take a regular position size as I normally would. And, you know, and I don't sell a lot of puts unless the volatility is very high to, you know, make the risk worth it. But, you know, in a market like this, 100%, we could go down 20% more. We could go down 80% more, right? But every single trade that we take is a risk. Any just regular directional trade we can take overnight and have something horrible happen overnight, right? Well, it felt like the market calmed down a little bit today, didn't it? Like it wasn't just a one-way train to the upside. It wasn't just a one-way train to the downside. There was some give and take to it. The volatility seemed to subside, right? So, yeah, right now the majority of my trades are either calls to the upside or puts to the downside, which is not like me, but you know, this is a different market situation right now. You're certainly welcome, Kamal. You are certainly welcome, sir. All right. Well, listen, if you have any questions, let me know. And if not, I'll just leave you off with a couple things. One, please try to go out and do something nice for somebody today in this current environment. Why not call somebody that maybe doesn't have a lot of friends, that's home quarantine? If they're home, check around on your friends, see how they're doing, right? Just try to do something nice, be a little something positive. There are some people out there that probably are out of their element with having to be home without, you know, being around people, and they would probably appreciate a phone call. So why not check up on them, say hi, make their day, right? And then secondly, again, just on the way out here, if you don't mind, if you did like today's podcast, if you could take a half a second, hit the thumbs up button, I would certainly really appreciate that. Jackson says, isn't it fascinating? And as you say, Greg, having a plan and a system is so important. Some are hoping it is a bottom. Others like me, like when it goes down. But at the end of the day, follow your rules. Yeah. We don't know what the market's going to do. We don't know if it's going to go up. We don't know what's going to go down. How far up? How far down? Some people, whether you're long or short or options or whatever, just have yourself a plan. That's the main thing. You just have to have yourself a plan. It doesn't have to be developed by MIT scientists. It just has to be a decent plan that gives you good upside and smaller downside. Dan, doing well. Have a Walmart grocery pickup today. Oh, cool. Really cool. I don't even have to go to the store. Tip for everyone. Don't own Walmart stock. Fantastic. I've heard a lot of people are doing that. Bing He, congratulations, my friend. Great trade. Really glad to see that. Proud of you. Miko25, thanks, Greg. We'll be in contact later today. Okay, sounds good. Jackson said, that's really good, Dan. I forgot about supermarket delivery. Yeah, I went to the store yesterday. I put on gloves and I walked around. People got close to me. I gave them the stink eye. No, I'm kidding. There were hardly any people in there. Dan says, MJ and free pickup too. Our supermarket in Australia are going really well here, although I don't trade ASX. Yeah. All right. Well, thank you all for coming today. Always nice to see you. I hope you have a good rest of your day. Take 5 minutes, call somebody that might be lonely or out of their element. Just call them, check up on them, see how they're doing. I think it will make their day, right? So, okay, well, that's it for today. Have a good rest of your night, and I will look forward to seeing everybody tomorrow if you can make it. Okay, bye now. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.